Everybody, thank you for joining us today. We are recording, so no funny business. And we want to be respectful of your time, obviously. So we're hoping this will be about a 30-minute presentation. Correct me if I'm wrong, Kendra.
Sure, probably maybe even a little less, but we'll see how in the weeds we get. But
Yeah.
yeah.
And from there, answer any questions and then send everybody on their way.
Sounds great.
Can you see the slides all right?
I sure can. Yeah.
Okay, great.
Great. Perfect. All right. Well, my name is Kendra Goldstein. I am an attorney and the vice president with Sterling Property Tax Specialists. We are a firm that specializes in representing property owners and some tenants with the right to appeal their taxes with respect to property tax appeal work in the state of Colorado. So what we really look at is reviewing kind of the assessor valuation to determine whether or not the assessor's estimated value under a mass appraisal basis is appropriate, or if it is accurately reflecting the property's value given the specific time frame. And in the event that it is not, if we think that there's an error that's been made or an overvaluation, then we file an appeal on behalf of our clients in order to try and reduce that value, thereby reducing the property tax liability. There's a lot that goes into it. It gets pretty complicated and there's a lot of moving dates. So what I want to do is kind of take everybody through the process, what that looks like, not just of the appeal, because an appeal isn't always warranted, but the relevant dates that are applicable for the revaluation, et cetera. So we're at April 9th. By law, every odd year, so 2023, 2025, 2027, the assessors throughout the state of Colorado, there are 64 counties, they are mandated to revalue all real property within their county every odd year, with the notices of value being sent out to property owners by May 1st. So right now, all of the counties have likely set their values for 2025. They're preparing their notices of value to be sent out, and everyone should be receiving a copy in the mail on or maybe slightly before May 1st. So in setting the value, the assessor considers a lot of information that actually predates May 1st of 2025. For the 2025 revaluation, the relevant date of value is June 30th of 2024. So Aviva, if you could go to the next slide. Okay, so this is kind of a little bit of a summary with respect to some of the dates and as well as the protest timelines. So you can see here that the date of value statutorily is June 30th of 2024, so almost a year ago. And it's really important to keep in mind that when you're receiving your notice of value in less than a month, it's not representative of the value as of today. It's representative of a value almost a year ago. So that's what's really important to keep in mind there. In order to determine the appropriate value, the assessors look at various data points gathered from a specific data collection period that is statutorily defined. So the assessors by law are supposed to consider information from the time frame of, it's really statutorily starting with an 18-month data collection period, which would be the 18 months prior to our data value. But most counties go back and use a full 24-month cycle just to get a full picture. So the assessors are looking at information by way of sales which transacted, leases which were entered into, market data with respect to vacancy, capitalization rates, et cetera. And they're looking at all of those factors under a cost approach basis, an income approach basis, and a sales comparison approach basis to gather that information and then put into modeling systems within their counties to come up with mass appraisal values depending on location, year of construction, property type, et cetera, to value the real property within their county. So that's what they are doing in this process. So in looking at that, they are gathering information from the sources that they can rely upon in order to do mass appraisal valuation. Sometimes that will mean that by way of doing that, because the assessor can't look at every single property individually, that might result in errors when it comes to your property's valuation, which is what your taxes are based upon. So what we do for our clients is when the assessor's values come out in May of this year, you have a very short time frame in which you can file an appeal. You can file a protest by June 8th, because this year the 8th falls on a Sunday. That actually kicks over to June 9th. But what the assessors are doing is during that time frame, you can file an appeal during those 5 weeks if you disagree with the value of your property as of June 30th of 2024. Also, what's important to consider is that the assessors, and what they are doing is they are capturing the value as of that date, but in the property's condition as of January 1st of 2025. So there's a lot of dates that are being thrown around. I mean, you're coming up with your values in May of 2025, but that value is based on market almost a year prior, with data gathered from the 2 years prior to that, but in the condition of your property of January 1st of this year. So there's a lot of different things going on, but it's important to remember that when you get your notice of value, it is looking at marketplace of almost a year ago, but in whatever condition the sticks and bricks were as of January 1st of this year. So you've got a very short time frame during which you can appeal the value. If you do want to appeal the value, what we end up doing is, for our clients, we write in a letter and a protest to the assessor's office, and then the assessor takes that into consideration. There are, generally speaking, for the Denver metro area, there are kind of 2 timeframes in which the assessors have to review the appeals and issue a determination based on what they think, given the arguments that we are presenting. For the most part, the Denver metro area, they're going to be on what we call the alternate procedure with respect to dates. If counties have more than 300,000 residents, then they are obligated to use this particular time frame. So I'm going to talk about this particular time frame. For smaller counties elsewhere, they're not obligated to use this alternate timeline as far as the relevant dates of when they have to respond and when you have to appeal by, but a county can certainly opt in. So just know that there are some nuances there with those dates, but for the most part, in looking at this, once we file our protest to the assessor's office, they have until August 15th to render a decision and determination from their office. And if we disagree with their either denial or maybe partial reduction, then you have an opportunity to appeal to the next level of appeal, which is at the County Board of Equalization. The County Board of Equalization is really also synonymous with the county commissioners, the Board of County Commissioners. However, many of our commissioners don't understand appraisal methodology. So usually at those hearings, you're going to have an independent hearing officer who is an appraiser who understands this. Because really what this comes down to, really a lot of it is appraisal. Like, what is the property worth? What we're trying to solve for, what the assessor's trying to solve for, and what our office is trying to solve for is, what is market value of a property as of June 30th, 2024, based on market that was accumulated or assembled during the prior 18 to 24 months. And the definition of market value is, what would a willing buyer purchase a property for from a willing seller without undue duress, exposed to the open marketplace as of that date and time. And we're really looking at those factors and for what anybody would take into consideration. So what we do, our team here, I'm an attorney.
And I'd agree with that too.
We have 4 appraisers on staff. We look at the actual subject property, financial information, occupancy information. We also look at market factors because, again, you might have tenants in an industrial property that have leases that commenced and were negotiated back in 2017. Well, what was happening in 2017 isn't really reflective of necessarily what's happening as of June 30th of 2024. So we take into consideration how the property is actually performing, but really because the assessor and we are charged with solving for is what is the value as of June 30th of 2024 based on market factors between July 1st, 2022 to June 30th of 2024. So that's where we need to look at more recent and relevant data by way of either rental rates, expense factors, et cetera. So that's what we're solving for and looking at that. And sometimes, sometimes the assessor has fairly valued the property. Perhaps they have undervalued the property. Because they're doing mass appraisal, they're really reconciling to a median value based on all the data that they are collecting during that relevant time frame. So sometimes you're going to have properties overvalued and sometimes you will have them undervalued. But it's important to also really consider what the value is in relation to what's going on as of June 30th of 2024 with respect to the marketplace at that point. So as we go through that, though, when we file the protest and then if necessary filing an appeal to the CBOE, at that point the independent hearing officer can give a recommendation. And if we don't think that that's an appropriate reduction, then there's a third level of appeal that you can appeal the case to, which is there's 3 venues. Most people go to the State Board of Assessment Appeals. Those venues are binding arbitration, district court, and the Board of Assessment Appeals. Generally, not many cases go to district court, and they probably shouldn't unless there's a legal issue involved at that point, because judges, again, don't know very much about valuation and appraisal methodology. They know about the law. So if there's a legal issue, it's appropriate for that venue. Generally, most of our cases go to the BAA because the BAA is made up of board members who are licensed appraisers and are knowledgeable about ad valorem valuation and legal issues with respect to this in particular. So that's a pretty general overview. Something else that I do want to bring to everybody's attention is that if for whatever reason you miss that June 8th, or in this year, June 9th filing deadline, you still have an opportunity for relief for going backwards under what's called the abatement process. An abatement is basically a retroactive appeal. You can go back statutorily 2 years. So we're in 2025 right now. You can go back and file an abatement for 2023 and 2024 at this point in time. And you'll be time barred for 2023 after December 31st of this year. So you can still go back in time if there's anyone that has not filed a protest and you think that your property was overvalued for 23 and 24.
How do you think this is so?
So once you can go back and do that and file the abatement, the assessor has more time to review and respond to an abatement filing than they do under this particular statutory, what's shown on the screen at this moment. They have more time, but you are still able to seek relief in the event that you think that 23 and 24 were overvalued. Just to keep in mind, all of the dates that are referenced on the screen at this moment will, of course, then trend back 2 years, right? The date of value would then be June 30th of 2022, with the data collection period starting in July 1st of 2020. So it's just important to keep those various dates in mind. And then again, of course, the condition of the property as of January 1st of each of those years. That's what we call the assessment date. Statutorily, because each revaluation cycle, and by cycle, I mean 23 and 24, that's one cycle, 25 and 26, that's another cycle. Those 2 years are the same date of value. So for 2025, this revaluation, as well as next year for 2026, which is what we call an intervening year, they share the same date of value of June 30th of 2024. The date of assessment is January 1st of each of those years. If there's been no change in the condition of the property between January 1st of 2025 to January 1st of 2026, then by law, those values must be identical. But if there's anybody that's doing new construction of a property, if as of January 1st of 2025, let's say that your property was under construction and it was 75% complete. The value that you will receive, the notice of value that you will receive in a few weeks, will be reflective of what the assessor's opinion of value is as of June 30th, 2024, but in that partial complete condition as of January 1st of 2025. And then, assuming that the property is finished by January 1st of 2026, you will receive a new value from the assessor's office, accounting for that change in condition and that increase in value based on the completion of the structure. So generally, we're looking at 2-year cycles, and the values should often be the same. But if there is that change in condition, say demolition as well, in that instance, you would see a variance between the 2 properties in that cycle. So that's just a couple of things to keep in mind. But I think that, what's very important to also remember, and Aviva, if you'll go to the next slide on this one, please.
Yep.
I think where a lot of property owners and taxpayers get tripped up is that because when they are receiving these, it's at such a different point in time. You have to really remember to not consider the current market. The current market isn't going to come into play until the 2027 valuation. So therefore, you've got to remember the date of value, that June 30th, 2024, and the assessment date of January 1st of 2025. Because this is a carte blanche revaluation, don't consider the rate of increase or decrease from the prior valuation, because every single time that this revaluation takes place, it is the assessor looking with fresh eyes of the marketplace as of that June 30th, 2024 date and the prior 18 to 24 months. They're not considering what was assigned before, because that was based on different market data. So it's important to kind of try and look at this with some blinders on. So you want to consider what market value is as of June 30th of 2024. What the market value of the fee simple estate. So that's really what they're considering, is what the real property is worth, not the business value that's in place. That's not able to be taken into consideration. What is just that real property worth, and what would a willing buyer and seller exchange that property for in the open marketplace? But again, because the date of value, the date of assessment is January 1st of the year, you need to look at the property characteristics. It's important to take into consideration any of those factors that would also impact a property's value in the marketplace. So one of the interesting things that we look at a variety of factors, including if there is maybe contamination on a property or other impairments in place, anything that a buyer would take into consideration in purchasing that property. Similar for a home, I'll use this as a simple example. If you were to go and buy a home, and after the inspection came back, it said, "Ooh, needs a new roof," you would adjust your purchase price downward to account for the cost of the new roof, or you would expect the seller to fix that in order for you to purchase it for what you would consider the property to be worth in good condition. So if there are issues that relate to the property's characteristics that would impact that market value, that's really important to take into consideration as well. And those are really the main keys. And then the only thing that I guess I didn't really maybe go into this with better detail, but where you go back to that date of value, June 30th of 2024, that's really kind of the point in time that you have to stop and you have to put on these blinders, because statutorily, the assessor is not really permitted to consider anything that happened in the marketplace after June 30th of 2024. So that's something that's really important. That goes into the next revaluation. So if you purchased your property in January of 2025, that's 6 months after the date of value, the assessor should not be considering that acquisition in their valuation of your property for this particular cycle. It'll come into play for the 2027 revaluation. And it may not be at your exact purchase price because also you need to time trend to our data value to account for what's going on in the marketplace as of that date. A perfect example of this is for the 2021 and 2022 valuation cycle, that data value was June 30th, 2020. The data collection period was July 1st of 2018 to June 30th of 2020. Well, as we all know, there was a pretty major event that happened in March of 2020 that had a serious impact to the real estate market. So even though for the majority of that data collection period, up until February, March of 2020, you had a pretty hot real estate market, and then everything stopped, and there were no transactions that were taking place that weren't already under contract and going through prior to the onset of COVID. So what the assessor had to do for that particular cycle is, with all of the data that they had, which almost everything predated the onset of COVID because there wasn't really anything happening, they had to take that data that was reflective of a pre-COVID marketplace and adjust it accordingly to June 30th of 2020 to capture and be reflective of a post-COVID marketplace. So there's a lot of various factors to think of and things to take into consideration. So that's just important to keep in mind that there's a lot of shifting and moving happening with all of this, and a lot of different things to take into consideration. So what we specialize in, of course, is knowing all of the legal implications and the standards by which both parties need to adhere to when considering what the value is, as well as just navigating the process and certainly having our appraisal eyes on, as well as our legal hats on, and looking at all of that to see whether or not a client's property is appropriately valued by the assessor's office, and then pursuing the appeal if not. I know that was a lot of information, but that's pretty much the general overview of what this looks like.
Next slide.
There, the next slide. Yeah. So that's pretty much it as far as the major slides go. But, certainly that is my contact information on there. We are in the process right now of making sure that we get all of the information from our clients, getting clients signed up so that when those values come out in a few weeks, we can hit the ground running. But we are actively preparing for the 2025 revaluation, as well as looking at 2023 and 2024 abatements for any clients that have not pursued an appeal for those particular properties. And our firm, like I said, we only work within the state of Colorado. There are some other firms out there that do nationwide representation. We just prefer to focus our efforts in one particular marketplace and become experts in that particular marketplace. We think that really benefits our clients with that level of focus. But we represent pretty much all properties, all commercial properties, whether it's industrial or self-storage or retail, office, what have you, as well as larger multifamily residential. Single-family residential is not something that we do, but we take into consideration all of the various market standpoints. So certainly if you have additional questions, and I know we're going to open this up as well to anyone that would like some more information, but my contact information is on there. I've been doing this for 16 years. My partner has been doing this for over almost 40 years. So this is all that we do. And I would certainly say that we are experts in this field. I think that we certainly enjoy it, but we understand a lot of the nuance in there. And we think that based on our level of expertise and experience doing this, we are able to, yield greater results for our clients than they would likely be able to do on their own. Certainly probably better than they would be able to do on their own, just with our level of expertise. So, happy to, as I said, answer any questions if we want to open it up. I know that there were a lot of dates there. Hopefully kind of that timeline set forth was helpful, since I know that can be somewhat confusing. But why don't we open it up, Aviva, and see if anybody has any questions?
Great, thank you. Kendra, if you
Yes.
don't mind sharing with everybody how the payment structure works, because I think it's
Sure.
fascinating. Yeah.
Yeah, so our firm, as well as most firms that do this, we're on a contingent fee basis. So you don't pay us anything unless we save you money. And the way that that benefits our clients as well is that if we are looking at their properties, we do a full analysis before we file anything to the assessor's office. So during that month of May, we live here. We live in the office. We're here 10 to 12 hours a day, 7 days a week, because we're looking at each property's specific information. Sometimes that means that no protest is warranted and no appeal is warranted. In that case, you don't pay us anything, and you know that you've got someone that's reviewing it, somebody that's looking at that, and then can say, hey, you know, this is a fair valuation. We don't recommend appealing it. For those that we do think warrant an appeal and a reduction in value, again, you're only going to pay us a fee, a contingent fee, if we are successful in achieving that for you. So that's what we typically look at there. There are some out-of-pocket costs depending on where you go throughout the appeals process. There's no cost of filing the appeal to the assessor's office. There's no cost of filing an appeal to the County Board of Equalization. If you do appeal to the third level of appeal, the Board of Assessment Appeals, there's a relatively nominal filing fee of $101.25. And then if you do go to trial at the BAA, then there would be additional out-of-pocket expenses. Of course, we only take something to trial if with our client's approval and direction to do so. That's another thing that is unique about our firm in comparison to some of our competitors is both Barry, my partner, and myself are licensed attorneys, and you do need legal representation at that level of the appeal. So that's included in our contingency fee. But when we're going to trial, we do need our clients we don't engage the outside appraiser, but our clients then need to go and engage and retain an outside independent appraiser to complete an appraisal of the property as of June 30th of 2024, and then testify to their appraisal determination at the actual hearing. So that can, of course, yield out-of-pocket costs for the cost of the appraisal and the appraiser's testimony time. But that's only going to happen in the event that the client authorizes that and we move forward. But, fortunately, we settle, I would say, we settle the majority of our cases. I've been working with these counties for, a number of years, and I would say that we've got a good rapport in working with them in order to resolve the case and avoid hearing whenever we can, proceeding to hearing whenever we can. But in some instances, you do have to go. And I went like 6 times in 2024 for all the appeals that we filed for the 23-24 cycle. That is such a small percentage of cases. So we resolve the majority of them, but we also really strive not to appeal anything that shouldn't be appealed, because that doesn't benefit anyone. One, by filing a protest that exposes a client to a risk of an increase, because the assessor can increase the value of a property if it is appealed via the protest structure. But also, we would like to maintain a reputation with these county assessors that we are not filing frivolous appeals. We want them to know that when they see something from Sterling come across their desk, that it has merit. Whether they agree with it or not, maybe a different thing, but that it has merit. The foundation for the argument that we are making is supplied to them, and that they know that when they're getting an appeal from us, it's going to have the information that they need in order to make a determination. So looking at that, but that was a long answer to your question, Aviva, which is that it's primarily contingent fee based.
Well, then it's no risk for the property owner.
Exactly. So
we have a question in the chat.
Okay.
So the implication here is, let's say I purchased at 50% of the city's estimated value after June of 24. I can't ask for a reassessment until 2027. Is that?
You can ask for a you can appeal it, but your post-base year acquisition would not be something that the assessor would take into consideration. The only time that the assessor can take into consideration a sale of a property or purchase of a property which transacted after June 30th of 2024 is if it was under contract on that date and closed under the same terms and conditions as was in place on that date of value. So if you did buy something, if you did buy your property, let's say early August of 2024, if it was under contract leading up to that for those same terms and conditions, then absolutely. But really, statutorily speaking, the assessor is barred from considering that post-base year acquisition because it is after the date of value. And that acquisition would come into play in 2027 for that revaluation.
That was my question, by the way. And is that, does that also imply that, do they take into consideration purchases? Like, like if in this example, like this actually happened, I purchased something for 50% of the estimated value. So it's like, this is crazy that, I'm getting assessed at this value, but like, do they care that we bought it at that price, or do they have like a different attitude about the market than we do as a buyer, which would be crazy, but it's possible.
Right. So this is an interesting question to answer because you're also going to see different, I shouldn't say attitudes, but different attitudes depending on the different counties. Some counties, they take it, they're really statutorily barred from considering it. Does that mean that they're not sensitive to it? Does that mean that they are not maybe empathetic? But really, from a legal standpoint, they are not allowed to consider it. Now, I think what's interesting, and tell me maybe your dates, because I'm sure, so are you telling me in your instance that you purchased a property maybe shortly after the June 30th, 2024, excuse me, June 30th, 2022 date, and your 23 and 24 value was at twice what you purchased it for?
Correct. The actual date, honestly, Aviva might remember the dates better than I will, but it was under contract for a long period of time because they had to clean it out. So there were, I think we were under contract though for like an extended period of time during that kind of window right at the end there. But
okay. If this is with respect to the 23-20, because of course we don't know the 25 values yet. If you purchased that property for 50% of the value that the assessor assigned for 23 and 24, and you were under contract as of June 30th of 22, that is relevant. And the assessor, that is worth bringing that to the assessor's attention. Certainly, because the concept here, of course, is if the parties are negotiating leading up to or at the date of value, what the price of a property is worth between a buyer and seller, even if you close after that date, your negotiated purchase price is reflective of the market as of that relevant date. Does that make sense?
Yeah, but why do I have a feeling that the city of Denver is maybe the least sympathetic to this, to the idea of purchase price? Would that be an inclination that makes sense or not necessarily?
I've not found that to be true personally.
Okay,
I
cool.
think that the city and county of Denver is actually one of the best counties to work with. They're arguably one of the most knowledgeable of the counties with respect. And they've got hundreds of thousands of properties that they're valuing. So there's a recognition that, of course, there are mistakes that might happen in the mass appraisal process. But I think that in bringing something to their attention, that is something, especially if it was under contract during that relevant data collection timeframe, they should absolutely be taking that into consideration. I don't know if you've had an experience with anyone in that particular county that would make you feel that way, but like I said, I've been working with a lot of these counties and a lot of these people that have been in these county assessor offices for a number of years. And that's not my experience with Denver, but again, you also would need to be able to say this was under contract during the relevant data collection period and as of the date of value, even though we closed post-base year, even if it was under contract for a certain amount of time, if your purchase price was really reflective of the market as of the date of value, then that's a very compelling argument that I think that they would absolutely be receptive in taking into consideration. Now, if it's something that was negotiated after June 30th of 2020, and I'll just stick with the 24 date of value for these purposes. If it was negotiated in November of 2024 and you closed on it in January of 2025, I think, they're really not supposed to take that post-base year information and time trend backward. They are supposed to really be putting on these blinders and not considering anything that happened after that date of value. But like I said, if you were under contract on the date of value, or for current property owners, if you were selling a property and maybe you were not successful in selling that property, but you received LOIs or other information, or maybe that was under contract, but it fell out of contract and it didn't actually close, those are still market indicators that are worth bringing to the assessor's attention of, hey, this is what I might have listed my property for, whatever it was, but that's not what the market was interested in. Market participants were telling me that they thought my property was worth X, even if I listed it for Y. And that's something that I think that if you brought to the assessor, that it would be a compelling argument, certainly.
Thank you so much. That's very helpful.
Yeah, of course.
And it was in July, so that's right on the edge there. That was when the LOI went in. Yeah. LOI
went in. I think it's worth, I think in my opinion, I would think that it would be worth bringing that to their attention, but certainly what our office would do would certainly consider other market factors prior to that are within the relevant data collection period.
Okay, thank you so much.
The reality is it probably didn't shift too much between June 30th and July, whenever that was, but you would want to make sure that you had other supporting information beyond just that post-year LOI.
Okay. Thanks.
Yeah.
Okay, Kendra, Jen in our office asked.
Oh, Jen.
Hey, Jen. How are the improvements being forced on owners by Energize Denver and other programs affecting our values and consequently filing for reductions in assessed value based on money being spent to bring the building to code?
Yep. So that goes back to, and that's a great question by Jen. We actually just recently sent out inquiries to our clients about this very issue, whether it's Energize Denver, there's an initiative in Boulder, and there's some state of Colorado initiatives. Now, Energize Denver, I believe that went into effect in 2023. So certainly in place as of the date of value. And we actually have a number of clients that are bringing this to our attention with respect to their need to spend money to bring Energize Denver and bring their property into compliance with those standards set forth there. So when earlier I was discussing what I would call impairments with the property, maybe it was contamination and the cost to cure that, or a bad roof and the cost to cure that. Similarly, if somebody's going to go in and purchase a property in June of 2024 and knowing that this is a real thing in place, this Energize Denver, that they're going to have to comply with, and that they are going to have to bring this property up to code, if you will, that's going to impact the purchase price. And so that's information we certainly want to know and take into consideration. Hopefully, our clients will have bids or estimates of cost of what needs to be done, but that's certainly a factor that we are taking into consideration for this 2025 valuation cycle. Because as of June 30th, that was a very real thing in place that market participants would consider. And so then we want to know that with the condition of the property as of January 1st of 2025, what those costs would be in order to bring the property into compliance.
Amazing. All right. Kyle is asking. He's working on a property that is currently under contract to be sold.
Okay.
The buyer is paying $6 to $7 million more than the appraised value, But in the buyer's underwriting assumption, they are assuming the property taxes will go down rather than up.
Okay. Is it under, okay. So I guess here's my question. Well, I guess my question is, what exactly is the question? So
There's more.
Oh, sorry. Okay.
He said when he saw this, he was extremely puzzled and thought there was no way that this could be possible.
Okay.
Is there a hypothetical situation where this could actually happen? If the property were to sell, how quickly would the property taxes change, immediately or not until the next assessment?
So that's a difficult one to answer without all of the facts. So, if they're under contract to purchase a property now, and of course, the taxes that are payable now in 2025 are reflective of the 2024 valuation because we pay in arrears. So the question there is there a pending appeal for 2023 and 2024? Was it a protest? Was it an abatement? Where is it in the process? So that's a whole thing, because I can tell you that, we have some cases from 2023 and 2024 that were abatements that are not set for hearing before the BAA until sometime in 2026. And sometimes we're not able to really resolve some of these matters until we get closer to that date of hearing. A lot of, these, when you think about it, these counties have thousands upon thousands of cases and appeals that they are working to resolve. So while they're trying to set the values for 2025, they're working on properties from 2023 and 2024. And sometimes they're not able to really get to looking at a particular case until it gets closer to the time of that hearing, that BAA hearing, which is kind of that ultimate level of appeal. In that instance, a settlement might be negotiated, or a resolution might be negotiated. And then if that's the case, if it was under the abatement structure, it depends on where it is in the level. So it's a really difficult question to answer. If it's at the Board of County Commissioners level, it goes to the Division of Property Taxation for approval. If it's at the BAA, then there's a stipulation, and then the BAA has to order an order on the stipulation, and then it has to go through kind of that bureaucratic red tape of then the assessor's office updating it. And so if you're under contract to buy something, it would just depend on where it is in the process. And it could take a while. So that's difficult for me to answer. So where that's put in there with the assumption that the property taxes will go down, to me, it's a little risky because, one, there's no guarantee that they will go down.
Can I just chime in and kind of clarify the question here?
Thank you, guys.
Yeah. So the property, without going into the exact numbers here, just because can't really disclose all that, I was looking at the appraised values on the property, and the guy who's buying it, he's paying about 6 to 7 million more than the value was recently appraised at.
Okay.
I think his plan is to do an abatement once taking ownership to try to reduce the taxes in the short term, because I believe the appraised value was even higher than it should have been through the last assessment, but he's paying even more than the property's worth. So the question is, even if he were to successfully do an abatement in the short term to get the property taxes reduced, his assumptions are that the taxes will only go up nominally on the next assessment. But if he's paying 6 to 7 million more than it was last appraised at, wouldn't those taxes jump up significantly from where they're at now, even if he plans on doing an abatement from the last assessment, because the belief is that the last assessment overvalued the property?
So
I think in the short term, he's trying to reduce the taxes, but the underwriting assumptions for the next 5 years are that they really won't go up that much more. But if you're paying 6 to 7 million more than the last appraised value, would you assume that the taxes would go up? Because the appraisers would look at it, well, it must be worth 6 to 7 million more than we last appraised at, because that's what a buyer was willing to pay.
Right. I mean, I think that, if he's looking at the 23-24 value and he thinks that it is overvalued based on the marketplace of June 30th of 2022, and he wants to go back and file an abatement, he can do that for 2023 and 2024. It'll take the assessor has 6 months to review that abatement petition and give a recommendation of what they would recommend to the Board of County Commissioners to do with respect to that value. Because yes, at that point, once the value is certified by the County Board of Equalization, the assessor can't go back and adjust the value. The BOCC has to adjust the value, and they can give a recommendation to the BOCC about what they think that reduction in value should be, if they agree that a reduction in value should be made. Of course, if he's purchasing a property now for $6 or $7 million over what the 23-24 value is, that really should stay out of it, because that is after June 30th of 2022.
Yes. So I guess to further clarify the question, then going forward through the next assessment, would the appraisers look at what he's paying for it now and then assess based off that value, which would then in turn cause the taxes at the next, the next cycle to go up drastically?
Absolutely.
Yes. Okay. Because in the
assessors-
assumption they have very, very nominal increases in the taxes come the next assessment period, but you're paying that much more, you would assume that those assumptions are off, because that number would go way up.
Right. Unless,
Okay.
So two things. One, the assessors are really not supposed to chase sales. One sale does not make a market. However, it's pretty compelling. If somebody buys a property for a dollar value, that's what they think it's worth. Now, unless there are extenuating circumstances, meaning that, it's not an arm's length transaction, or it's creative financing, or maybe there's business value that's attributable to that. That would be separate from really the fee simple estate and the real estate. Absolutely. If this is, I would expect those values to go up, absent some crazy change in market conditions like we saw with COVID, right? But if he's purchasing it for $6 or $7 million more than what's currently assigned, I would expect it to go up in 2027. It shouldn't go up to match that purchase price for 25, because again, that's after the June 30th, 2024 data value. But I would expect it starting in 2027 to go up.
To go up a lot. Okay. That's kind of where I was trying to get at with all this. So
Yeah.
All righty. Thank you for that clarification. I appreciate it.
Absolutely.
Thank you for the question, Kyle. Does anybody else have any other questions while we have Kendra on the line? And if you want to unmute yourself or put them in the chat, you may. But I just wanted to say thank you all so much for being here. Kendra, thank you for sharing your vast knowledge about property tax abatement with us. Our company only uses Sterling property tax specialists for all of our abatements, so they come highly recommended. And I really appreciate your time, and happy Warehouse Wednesday.
Thank you. Thank you for having me. It was wonderful to be with everybody. And if anyone has other questions or would like to discuss their property portfolios and how we might help, you can find my contact information on that last slide.
And we will send it out to everybody so everybody can have your info easier. So
thank you so much for having me.
thank you. Thank you, Kendra. Thank you, everybody, for joining, and we hope you have a great day.
Thank you.
Alrighty. Have a good one.